Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 10 a.m. Positive up move continues on the street, and we have made a new all-time high, lifetime high rather, on the Sensex and Nifty and possibly Bank Nifty. Before I go any further, let me give you certain levels. As I speak to you, Sensex is up about 270 odd points. 84,820 is the level on Sensex. Nifty up about 125 points. 25,905 is the level on Nifty spot. Bank Nifty up about 90 odd points. 53,885 is the level on Bank Nifty. And on rupee dollar equation and on crude oil, well, strength in the rupee of 0.09 paise, and the level is 83.46. Uptick in crude oil prices, surprisingly, after almost about 10 to 15 days of downtick. Brent is trading at about $75.10 a barrel. NYMEX is trading at about $71.63 to a barrel. Uptick because of the situation, of course, in the Middle East, and of course some kind of speculative buying in the commodity market. So the view on the crude oil and rupee dollar is, well, on the rupee dollar we were very clear, friends. For the last 2 weeks, that is almost a fortnight, we had maintained that 83.90, 84 levels will be the levels wherein dollar supply is likely to come through, either from the Reserve Bank of India or banks supplying dollars into the market to stabilize the rupee. And of course, the last week's Fed rate cut of 50 basis point on the higher side, it has created its impact on the global currencies versus the dollar. And the view is that possibly we are going to stay, as far as the rupee dollar equation is concerned, possibly we'll see some more of a strength, 83.30 to 83.35 on the strength in the rupee against the dollar. And towards the weakness, I think 83.50, 83.55. So that's going to be the broad range for rupee dollar equation. And on the crude oil front, I don't think we'll spike up more from here, but I think elevated levels marginally is here to stay. So expect trade to be in an absolute narrow range for Brent and NYMEX, unless and until some kind of a negative news flow from the Middle East. Yeah, then on the flip side, demand supply does not create any kind of scenario for move up other than the geopolitical situation in the Middle East. Now coming to the markets, friends. The momentum will be on the upside. You need to be having bias on the positive side, is the commentary over the last couple of weeks, especially over the last fortnight, friends. And last week also we maintained that we have the capability of going towards 25,600, 25,650, and I think that has been taken off quite decisively last week and this morning. But now is the time to be a little bit cautious, friends. We have seen a consistent uptick, more than what the expectation was, and whenever market delivers more than expected, I think your expectation should be scaled down, and you need to be a little bit careful and cautious in the markets given the kind of run up that we've seen, purely from a short to medium term. I am not putting a case or a bear case scenario from a long term point of view. Please do not mistaken me. It is only a case from a short to medium term point of view for traders. If you have the appetite for higher risk, if you have the appetite for scaling your stop losses on the higher side and maximizing your profit, then and only then be in the market. Otherwise, if you have profits, try to maximize your positions and convert it to cash. And for the balance position which is open in the market from a short to medium term point of view, please keep a profitable stop loss in place in the system, not in your mind or not hypothetically speaking. Please put it in the system, because this market is going to surprise you. More importantly, friends, this week is the F&O expiry. So this adds to the cautiousness from a short to medium term point of view. And we have seen, friends, market has the capability of moving in both directions and chopping off traders on both sides. If you go long, you get chopped off. If you go short, you get chopped off. And not many people are familiar with what hedging is. and especially if you're doing trades in the F&O segment, I think hedge is the most appropriate way to take positions in the F&O segment, whether you're taking position in futures or whether you're taking any kind of position in put and call. But hedging is something that is most appropriate thing to do in a scenario like this. Don't take naked positions one side, otherwise you have to brace for your well-being and prayers to God. So be very careful, cautious if you're a trader, if you've taken naked position. Even if you take an hedge position, I think you need to execute both trades at the same time simultaneously. Not that you will wind up trade from one side and keep open the other side. That is also not acceptable. So please be very, very careful, cautious. And I'm sure by the time we approach the expiry day, I think you are going to see a lot of choppiness and volatility. Expiry happens to be on 26th of this month, that is Thursday. Monthly expiry I'm talking about. So other than that, I think of course we are seeing a well placed ground. FIs have shown increased amount of activity on the buy side after a long time. Even last month in the month of August, net if you actually go to see, the number was on the sell side from the FIs. But now their wisdom has prevailed and they are coming back, especially post the rate cut in the United States and the statement made by the Fed chair that there will be 2 more rate cuts this year by December 24 of 25 basis point. Time is not given when they'll cut it. It will appropriate time. And furthermore rate cuts next year. So the case of argument has now again come up whether RBI should also follow. So I will again say the same thing. Central banks across the globe do what they have to do according to what is appropriate for their economy, what the data points tell them in terms of numbers and where the situation is. It is not necessary that because some central banks in the leading or developed country have cut rates, other emerging market central banks have to ape them. It's a wrong notion, it's a wrong thinking, and I think we have to give respect to the RBI governor and the thought process of Monetary Policy Committee. They are appropriate people and they are capable people. I think we should not try to, put things in the minds of the people around. Let a very thoughtful process be approached and accordingly the rate cuts will come through. So the case is being that we will possibly be moving on the upside. Post the expiry, I think we'll again get back to the basics, and more importantly friends, I think from post 10th of October, between 10th and 12th October onwards, we will have the earnings curtain raiser for the second quarter this financial year, and I think that will possibly tell you the direction of the market in terms of earning visibility, growth, sectorial preference, stock specific preference, etc, etc, etc. But the momentum is going to be on the positive side. Last time also we had given you 2 levels. This time also I'll give you 2 levels, both 2 levels on the lower side, 2 levels on the higher side. And the range is going to be very, very broad friends, simply because the market is in a uncharted territory and a lifetime high. So by default the range also becomes much, much wider. So the lower side remains on 25,300 to 25,400. This is because of the gap up and the momentum that we've seen on the high side and the headwinds in terms of overhead supply or profit booking becoming a little bit top heavy. 25,950 to 26,100. These are the 2 levels on the higher side wherein you will see a vertigo kind of a feeling, top heavy, given the kind of momentum. And we always say that after a rally, some amount of consolidation, profit booking, range bound trade is most appropriate to expect, because that's the healthy market that creates a base, that gives you a foundation, that gives an opportunity for short-term traders to exit, long-term investors to come into the market and look at some growth ideas from an investment perspective. With that theme in mind, friends, we share 2 investment ideas, 2 virtually very different themes today we have identified. Private company from defense and technology space. The company's name is Astra Microwave. We expect the order book The order book is already very, very strong, friends, let me say this, and it's one of the core private players in terms of communication activities for the defense personnel in various forces, whether it is Air Force, Navy, Army, Border Security Force, Coast Guard, or whatever be it. So Astra Microwave is the first investment idea. Capability is there, earning visibility is there, order book is going to grow going forward from here on, and the capability of the company to execute the order book is also very, very strong. So start accumulating at current levels. You possibly see 1000 plus levels on Astra Microwave approximately on the earning visibility of future earnings to come by. So the first investment idea is Astra Microwave, 1000 plus. Maybe we might revise the target upwards in case if the earnings are better than what our estimates are. The second one is a government PSU, Coal India, one of the largest coal mining company in the world with largest reserve in form of coal. Quality of coal was a little bit of concern, but now the quality has improved, quantity is improved, and margins have improved. E-auctions have actually given a much more clarity in terms of pricing of coal, and of course the capability of capacity of the company to mine more is absolutely no-brainer. 600 kind of levels plus is the target on Coal India approximately. If earnings come by better than expected, then targets get revised upwards. But mind you friends, these two are long-term investment ideas, so please bear in mind, start from current level, add to it on dips. These are not BTST or short-term, medium-term ideas, so don't approach these two stocks with that kind of a thought process. Have a long-term time horizon, and by long-term definition is at least 12, 16, 18 months plus. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye-bye.